Good afternoon, good evening, welcome everyone. This is Coach Mike, founder and owner of Walk On Consultants, where I try to help people decipher the stock market and try to separate fact from fiction and the myths and misconceptions that people have about the stock market. Today's topic is going to be one of those topics that I normally, one of those slides that I normally show at the end of the presentation, where it talks about monitoring your portfolio, listening to the quarterly earnings reports, right? If you own stocks, you gotta, listen to their quarterly earnings reports. So what does that all mean? Well, today's topic, I'm actually going to go into a little more detail, where it's normally just a quick mention at the end. Today, we're gonna dig into some of the details because after all, it is earnings season. So without further ado, I'm going to share my screen. Let's get right into the presentation. All right, so welcome everyone. This is the August meeting. We meet the first Tuesday of every month, 7 p.m. Same time, same place. Always, we had a slight adjusted in the schedule for July because July 4th was on a Tuesday, but we normally meet on the first Tuesday of the month, and it's usually virtual, working on getting a location. But everyone's welcome, from the beginners to the most advanced investors. And we welcome all topics, and we're open to suggestions. So the group is growing, 357 members in the meetup group now, up from 211 members when I took over back during the pandemic. So again, I'm your host, Coach Mike. Here's my contact info. If you'd like to book a free 15-minute, no strings attached consultation where we can just talk, get to know each other, and figure out if we are a good match. So I always begin the meetings with a quote from Benjamin Franklin. Here's one of my favorites, that an investment in knowledge pays the best interest. And I couldn't have said it better myself. If you're here for the right reasons, because I'm a teacher and a coach, and I want you to learn how to make better investment decisions. So thank you for tuning in today. So as mentioned, quarterly earnings, that is a topic for today. If you got, I'm not going to jump ahead. Let me just say that I'm going to leave it there and go to the next slide. What is earnings season, right? What is earnings season? We are right in the middle or towards the end of earnings seasons. But what does that mean? Okay. So if you are a publicly traded company like Facebook, which is now called Meta, or General Motors, or it doesn't really matter. If you're a publicly traded company, you have an obligation to your shareholders and to the SEC to report how you did every quarter. Think of it as a football game. At the end of the quarter, there's a timeout, and teams get together and try to figure out what's working, what's not working. Or if you're in school, right, you got a semester, you got a quarter, we check in to see how you're doing so that we don't tell you at the end of the year, hey, you failed. We have a check-in every single quarter, and that's what quarterly earnings reports is all about. So you look at April, May, and June, and what for the second quarter, but let's just go January, February, March. That's the end of the first quarter. Companies report their earnings in April, some of them in May. Then you got the second quarter, which is April, May, and June. Companies report their earnings in July. Throughout the whole month of July, some of them even go into August, where they're still reporting what they did for the second quarter. So that's what we're going to talk about today, is what happens, what should you look for when a company reports their quarterly earnings. So right now, we're talking about earnings season. So Wall Street analysts, and there are tons of them, as you can see on the right side, I've got one of the functions that they do. They list upgrades or downgrades. Is this stock a buy? Is it a hold? Is it a sell? Have we upgraded it from a hold to a from a hold to a buy, right? Have we downgraded it to a sell? But today's company is Tesla. There are 36 different analysts that follow Tesla. And on the left, you see the price targets range from a low of 24 to a high of 350. Your analysts have wide-ranging opinions, just like everybody else, right? The average price target a year from now is 235.79, but the stock's already above that. So how much farther can Tesla go? If the average Wall Street analyst thinks the price target, the one-year price target is 235, stock's already at 263, how much further can it go a year from now? So maybe, the appropriate ranking should be a hold right now. So who knows? But that's what Wall Street analysts do. They rank buy, sell, or hold. They give price targets. They also want to know, did you meet or beat expectations? They They question management and they want to know, what are you going to do next quarter? Yes, you had a good quarter, but what's happening next quarter? So you've got to give forecasts. So what they're looking for, revenue, which is top line, and I kind of put some of the Wall Street lingo in parentheses. They talk about top line, bottom line. What they're really talking about is the revenue. How many cars did you sell? How much money did that bring in, right? How much were your expenses, your payroll, your rent, all those things that companies have to pay for? And then what's left over, okay? What's the bottom line, okay? EPS, or earnings per share, is how much is available to each shareholder. So if you're a publicly traded company, if you've got millions of shares out there, you got millions of dollars, what's the breakdown to each and every shareholder, okay? Next is year over year or quarter over quarter. So we're always doing two things. We're looking in the rearview mirror, but also looking through the windshield. So how does this quarter compare to the previous quarter? And then what's our projection for the next quarter, okay, or for the next year? So those are things that whatever stock you own, whatever stock you own, you got to tune in every quarter to see what they are reporting. Was it better than the previous quarter? And what's the projection for the next quarter? And of course, in addition to what the analysts say on Wall Street. So if it's too much for you to handle, because I know I've got a wide range of people. Some of the people on this call already know what I'm talking about, some don't. But if we were to compare a public company to you, the top line is like your paycheck. That's what you get paid for every 2 weeks for working, right? Your expenses are similar, right? You got rent, car insurance, right? Food, kids, whatever, right? You've got expenses, right? And then your net income is just like the company's net income, okay? So I just really want to make a comparison so that you guys can understand that what we're talking about here is no different from what you're already experiencing in your own life. Is that your net income, if you have kids, well, how much is available to each kid, right? And will they get Christmas presents? Will they get birthday gifts, right? Will you go on vacation? Will you have money for a weekend getaway, right? How much is left over for those other things after you've paid for the essentials, okay? And maybe you do this, maybe you don't, but I look at, am I making more money this year than I did last year? Am I going to make more money next year than I did this year? So this is the same thing, whether it's a person or a company. It's all about looking at what we did and making a projection of what we're going to do the next year, okay? So when it comes down to that, did you meet or beat estimates? That is crucial, along with the forecast going forward, right? Because we can cry over spilled milk about the last quarter, but what are you going to do to fix it and get better next quarter, next year? And this is crucial when you look at what happens when they report those earnings. Did they meet? Did they beat? And what's your projection going forward? So I've highlighted Tesla. Okay, it's a company that I know everyone is familiar with. So I didn't want to pick some obscure company. Everyone knows about Tesla, right? On the left, I've got their quarterly earnings, and on the right, I have their annual earnings. And as you can see, in the third quarter of last year, then the fourth quarter, and then the first 2 quarters of this year, revenues have been going up, and then the earnings also have been decreasing somewhat, right? When you look at a quarterly basis. When you look at the big picture, which is also important, where they came from in 2019, they've made huge improvements in both the top line and the bottom line. So kudos to Tesla for really, really making strides in their performance. But one thing I got to point out is if you look at the quarterly earnings, right, they average around $20 billion or so, 20 billion in the third quarter of last year, well, like 21 billion. The fourth quarter of last year, 24 billion. And then the first quarter of this year, 23 billion. And then for the second quarter of this year, 25 billion, right? Now, that's just per quarter. That's just one quarter. If you look at 2019, that's how much they sold in a whole year. So they are really, really making strides. They're selling as much in a quarter as they did in a whole year. They're really growing. So now they sold 80 billion last year. Okay, that's a huge improvement. And so the growth is certainly there. Now, when it comes down to the bottom line, the earnings per share, the open circle represents what the estimate was. So we estimated that we would earn, let's say, $1 per share. In the third quarter of last year, they actually earned $1.06. So they beat it by 6 cents. And again, open circle means the estimate. The filled in circle means what they actually did. In the first quarter of this year, they met expectations. They said 85 cents per share, and they earned 85 cents per share. For the second quarter of this year, they beat expectations by 9 cents. So this is what I mean. It's two things. It's the expectation, and did you meet it or beat it? And then what's the forecast for next year? So what I also noticed is that the next quarter is lower. Looks like maybe only 80 cents per share. So one of those reasons that Tesla had to cut their prices on the car. I think they cut 3 times. They slashed prices 3 times within the last year. And that is partially because there's now more competition. Tesla was like Netflix. They were the only one on the block, right? But now Ford, General Motors, and everybody's jumping into the EV race, right? Same thing with Netflix. At one time, they were the only ones who did streaming. Now everybody does streaming. So you've got competition and you've got to cut your prices, which means you may make less money. Now, people will probably be loyal to Tesla the way they're loyal to Apple, but I'm just giving you food for thought that, yeah, they're meeting expectations, they're beating expectations, but going forward, as competition increases, it's going to get harder and harder to have those same results. So here's another thing you can look at is, well, how did Wall Street react? They reported their earnings, but what was the reaction from Wall Street? And as you can see, Tesla shares dip after hours as earnings call disappoints. Okay, so again, it's what is the reaction? So these are some of the things that I've mentioned in the past as a passing moment, a slide at the end of the presentation. Today, I'm focusing strictly on earnings because we're in earnings season. So I'm hoping that you're catching on and understanding and learning what it means to be in earnings season, and use this analysis for your own company, whether that's you got stock in General Motors, you got stock in Kraft or Microsoft or whoever, right? So lastly, you've got to compare your company to its peers. So if you own a food company, compare it to another food company. You own a technology company, compare it to another technology company. We're going to look at 2 things. The old school, the General Motors, Ford, Toyota, Nissan, who are still making gas-powered cars, right? And some of them are making hybrids, to the new school cars, right? Who are strictly EV cars. And it looks like most of them are based in China. BYD, which is has a large investment from Warren Buffett, by the way. NIO, Li, XPeng, right? They're all China-based. I believe Lucid and Rivian are American-based companies. But the reason you want to do this is because if Tesla is cutting prices, are the other companies cutting prices? If Tesla says we got issues with supply chain, is it an excuse or is it across the industry? So you got to listen to these things because sometimes companies have excuses, sometimes they're legitimate, sometimes they're not. You'll know if all the companies are experiencing some of the same things like supply chain or pricing power, right? This is why you got to look at the competition. Then maybe it's unique to your company or it affects the whole industry. So again, this is why I'm really focusing on earnings season and competitors, okay? Now, wrapping up here, wrapping down to the last few slides. I just always like to remind you that you need to have a diversified portfolio. Tesla is part of what we call consumer discretionary, right? You want to have some stocks in consumer staples and some in consumer discretionary, but also technology, healthcare, and so on, because some sectors of the market will do well when others are not, and vice versa. So make sure you've got a diversified portfolio. Do not have 5 different EV makers in your portfolio. Please don't do that, okay? And here is what I said that the last slide in my portfolio, the last slide in the presentation is actually what I focus on today. But you got to do this on a quarterly basis of all of your stocks. Review them, look at the winners and losers, make some adjustments, book an appointment with me. I can help you go over your portfolio and figure out which stocks are winners and losers and which ones maybe just had a bad quarter and long-term will be okay. Lastly, I like to say that learning is a journey. It is not a destination. I've been investing since the late 80s, early 90s, and I still learn new stuff all the time. So please don't feel like 1 or 2 workshops and now you're ready to go. You know everything you need to know. It is a process. Continue learning no matter what you do. Again, thank you for listening. I'm your host. Here's my contact information. If you'd like to book an appointment, I look forward to talking to you. And thank you for listening. I will see you guys on the next one in the first Tuesday of September. If you got any questions, please reach out and book an appointment. I'll talk to you guys soon.